this Australian dollar giveth and taketh away here this morning. I actually haven't had time to technically look at what happened. I totally missed it. I didn't even watch last night. Did you watch last night?
Couldn't make it till 9:30. No, I was asleep by 8:45. No rate cut.
No rate cut.
As expected. They said they were going to quicken their pace in 2025.
There you go.
So they said exactly what the market expected. They did exactly. They kept the rates at 4.35, I believe. And they basically took out all that bounce we had yesterday. We're right back to where we were. So we're skidding across the bottom end of the range here.
Yeah, this is a real interesting one. And I think you make a great point, which is pretty much everybody expected exactly what happened yesterday to happen. I think we even talked about it, where it was like, okay, the expectation is they're not going to cut. Could get a surprise cut. Like, that would be the only thing that would have been really a surprise, is if you got a surprise cut from the Australian Central Bank. But it was likely that they weren't going to do anything but give you that kind of, relatively hawkish action, but dovish rhetoric, which you would have thought would have balanced everything out. But now you have, the Australian dollar back near its lows, under 64 cents. Seems like a really weak kind of. You and I don't care about signals or anything else, but this is pretty weak.
Tape action, yeah. Because if they cut, that would have been quote unquote a surprise cut. You would have thought the move would have been to the downside.
Yeah, I would have thought it would have been this.
And if they did nothing and they bled the market out from yesterday's rally. So here's a case: sizable rally, almost 100 pips yesterday, 80 pips from a little bit high. But they couldn't hold on to that rally for more than 24 hours, and a neutral release. I honestly thought if they did cut, they would have tested those lows, taken out those lows, and then they might have bounced a little bit. But this is not great taping. So in other words, if you're a macro guy, what puzzle of words do you need to come out to make this rally? Because they got exactly what should have been, at least flat to bullish. And if there was any life to the upside in this, and I'm not saying, again, if you're looking for something cheap, Aussie's cheap right now. But when it came off in the afternoon, back to that 64.20 level, 64.25, if they had released this and it just held there, you would have expected it to maybe get back up more to that 64.5 or back challenge those highs. If there was any zeal left.
Yeah.
Okay, the uncertainty's off the board. We got what's expected. We're going to resume the rally and the correction a little bit. None of that took place.
No, I couldn't agree with you more. It seems really weak for this market to have the meeting that they had last night and to see where this market is now. Because, it's been beaten up pretty bad over this is pretty much the last week or so of action, and we'll go to the daily chart in a second. But for them to come out and to hold at 4.5%, not do the surprise cut, and then still sell off like they have here, tells you that there's not a lot of bullish participants out there.
Just, let me put if you want to attach news to news to movement, okay, what news did they need to actually rally smart? We're going to hike rates?
Yeah, I don't know. I don't know what helps them at this point aside from
China selling off didn't help either.
Did they give back?
They gave back a little bit of it. Yeah, so they're, there was a nice move in FXI and some of the usual Chinese stuff. So we saw copper rallied up almost 10 cents up to its 200-day moving average. So
metals had a huge move
up
and
to
gave back.
Silver, right? Silver was up almost $1, gave back almost half of it. All those things that helped Aussie put that ground in yesterday all kind of worked against it today. This is interesting here because now we're going to go into U.S. inflation numbers tomorrow on Thursday. We have an ECB announcement Thursday, which isn't going to really affect Aussie much, I don't think. But what is going to cause Aussie to rally here? This is the story. And I don't like to take, I need this news piece and this news piece, because it doesn't work. I more rely on that any confluence of a relatively neutral policy announcement with neutral talk afterwards, and it couldn't hold legs into a small up move. So is there two-way risk here? Doesn't feel like it.
Well, and you make a great point. Maybe we're idiots for thinking that a central bank meeting from Australia in this environment was going to be a potential catalyst for the upside. Now, we didn't say that obviously yesterday, but to think, oh, you know, if they come out and don't cut, maybe we get back to 65. That doesn't seem like the market. The market right now, it's telling you pretty clearly that for Aussie to get a significant bounce, it's likely going to be on the back of metals and China. That's what seems to be the highest correlation in this market. And of course, you know, you can be the macro guy who's looking at Australian employment and inflation and the central bank, the pace of rate cuts for next year. We're in an environment now where pretty much everybody is cutting. Right. We're going to talk about Canada, who has a meeting tomorrow, and they've cut already 125 basis points, right, and they're expected to cut another 50 tomorrow. The U.S. is already cutting. ECB is cutting. Bank of England's cutting. Everybody's cutting except for Japan, which is a different story. And so is the interest rate story and the central bank story pretty much irrelevant for everybody except for maybe Japan versus that dollar yen
the larger carry trades
has really fluctuated based on that carry trade, which obviously is based on interest rates. But it seems like this Australian story is really where are metals at and what's China doing here today, and not so much
interest rate
the
differentials.
textbook.
Right, because if you looked at, again, 435, and they're talking, again, they've cut in 15 basis point or raised the 15 basis point increment. So their aggressive cutting could be not at 25 or 50 basis points at a clip, but much smaller clip sizes. So I think this is a case where the rate story is a little, you would think the rate story is a little less impactful. The China story seems to be a little bit more.
Yeah.
And I think this is an example of there is still, you look at Euro week, they tried to get a rally out of everything yesterday. They dollar Swiss sold off pretty good. Euro USD rallied. They really tried to put some air underneath the lows here, and they really couldn't hold on too much of it. Euro back right. We're right back to 105 like a magnet. So the dollar strength piece is kind of rearing its head here, and the Aussie is suffering at that. So
yeah, and it'll be the euro relative to the ECB meeting that we have on Thursday. That will be a little bit more interesting. But yeah, I mean, Australia right now, it seems like, what is China doing is the first question you ask when you see Aussies up or down 50 pips. But either way, okay, they hold rates, but they expect to have an aggressive rate cutting policy next year. And they gave back all of the ground from yesterday early morning, and they're sitting right there at the lows, under 64.
Yeah, and that was a nice bounce yesterday.
It was a nice rally. Right. Here, I'll pull up really quickly again this 15-minute chart. This is a rally from 63.80 to above 64.60. That's an over 1% move, because keep in mind that this is, 100 pips in Aussie is not the same as 100 pips in sterling, because this is such a smaller notional product here. And so this was at one point a 1.2% move. Forex markets, Pete, some of them don't move 10% in a year, let alone 1.2% in a day. So yesterday was a huge, but it's interesting to me that you had this huge move yesterday, mainly on the Chinese equity market being up 7%. And today now you have this market, this was when the news came out, the central bank stuff came out, was right in here. And it's a sell-off, but this is a a 40 pip sell off amid the central bank meeting, as opposed to an 80 pip rally during all the China stuff, and then a 30 or 40 pip sell off amid China coming back.
Right.
And so the correlation is telling you that the Chinese equity story and maybe what the U.S.-Chinese relations and what China is going to do with its own stimulus and everything like that, it's having more of an effect on Aussie than some of the central bank stuff. But on that note of potential tariffs and everything else, let's get into Canada, because this market here is right at its lows, and they have what'll be a really interesting central bank meeting tomorrow morning, because they're expected to act. Here I have the 15-minute chart, but I'll go to the daily just to show you. Holy smokes, man, this is a rough time for Canada.
Hasn't it? A huge move to the upside. You saw that little, so interesting yesterday where you saw that rally in Aussie. They tried it in Canada but couldn't put it in. So this is one that is getting, again, you're getting buffeted by the new administration's, everybody's getting 25% tariffs, north and south, on top of a rate trajectory that's lower, and some of the commodity pieces like crude certainly not helping it here.
Well, and I think they printed 6.8% in unemployment last week.
The number was not good on Friday.
And I think they've surprised to the upside in unemployment multiple times now in Canada. And so you can see here, this is not the same as that Australian rate chart that I just showed you, which has been flat at 4.35%. They got up to 5%, which was aggressive with the U.S. and Bank of England and some other aggressive central banks globally amid all the inflation from 2022 and 23. And they've already cut pretty aggressively, and they're expected tomorrow to cut another 50 basis points. Holy smokes. So this might be a more interesting one, and tells you a little bit of why this the Canadian dollar is already at its lows. And Pete, right now, I mean, we're threatening 142 prior to this meeting. We still have a little over 24 hours before that meeting. I want to take a look here and see the last time we got 142 was the pandemic. Yeah. And this is a weekly chart, so really only 2 or 3 weeks where we printed above this 142 level. And let me see if I can get even more data to see, because remember those pandemic lows or highs, depending on the market. Yeah, we're pretty much those extreme levels going back to usually the financial crisis. But during the financial crisis, dollar CAD was actually trading in the 120 to 130 range. But you can see here, this is a monthly chart. We haven't spent historically more than a month above 142 in this dollar CAD, going all the way back to 2003. Yep. Wow. Yeah,
and we briefly printed above 160 on that one.
That's what was going on in the early aughts? What was that about?
U.S. rates.
Gotcha.
A lot of divergence. Now, traditionally, Aussie and Canada rates have sat on top of U.S. rates. There was always a risk premium that commanded Aussie and Canada rates had to be higher or the currency got softer. Now we're seeing Canada rates under U.S. rates as they move to aggressively cut. Aussie rates on par with U.S. rates with a bias towards easing. So that leg that supports Aussie, that supports Canada historically is changing a little bit. So not to say what worked 10 years ago works today, and I don't like to necessarily make that analogy, but there was always a buffer of higher rates coming out of these currencies that supported them a little bit more that we're not seeing right now. So yeah, this is a little bit unrelenting here, and
but it's funny because we talked about a couple of weeks ago kind of the perfect storm potential for a given market, which is just that markets don't tend to kind of have an extreme move on maybe one news item or one story. But this is one where if you're talking about, okay, domestically in Canada, what's going on? Well, they're seeing high unemployment, low employment changes. And their economy, the growth, everybody's growth globally, has come down from those highs that we saw coming out of the pandemic. Now, what's going on across North America? Well, you have now President Trump, who's already come in and talked about higher tariffs, especially for the nearshoring that's been going on in Mexico and Canada as well. And then you pile on top of it, to your point, Pete, and that's good context because I didn't really think about it that way, which is Canada and Australia, their currencies are oftentimes viewed as kind of almost like a risk-on asset. They're commodity currencies, right? And when you talked about it, really resonated with me the risk premium or whatever you want to call it,
the yield premium,
and historically it sounds like there tended to be maybe 50 basis points, 100 basis points, whatever it was, of premium in maybe Canadian interest rates or Australian interest rates, because there's a higher risk in those more risk on commodity currencies if you're going to hold them, so you should be getting a higher yield. Now the fact
that's exactly right,
that's been flattened out and that's actually negative. The U.S. has talked about how we've already cut a little bit, but we're not cutting once again as aggressively as everybody had projected at the start of 2024. If that dips down even more negative, and they cut down to 3.25 versus the U.S. right now, which I think is at 4.5, 4.75, and that trajectory continues throughout 2025. Now you might have perfect storm potential, or at least this market's sizing up for that perfect storm potential of 142 and potentially beyond. It'll be really interesting, man, because like I say, you see these different instances, the pandemic, some of that risk off trade in 2015 to 16 there, and they didn't spend a lot of time at these levels. And we are getting right there. And so will we spend December and January
are
there?
Are the Canadians upset the Canadian dollar is weakening? Again, if they're slowing down, the quickest way to jumpstart your economy is depreciate your currency.
Yeah.
You basically put your country on sale in terms of what you're exporting. So I don't think you're going to see a lot of complaining out of...
we're not cutting rates, actually, because we're worried about devaluing our currency.
Right.
Yeah.
So there... do we have, which is great, because if you're the contrarian, you're going to say this has been a heck of a run right after the election, from 134 to 142, slightly under it. If you're looking to fade something that you think is overdone, it's great. From a momentum guy, it's already cleared a lot of the old tops.
Yeah.
So, I think this is one where if you're going to be a momentum guy, you got to look for, does an event like tomorrow give you does dollar Canada get sold and give you a chance to buy some dollars against Canada at cheaper levels? Or do they cleanly break 142 and you're trading momentum and you're buying those new highs? If you're going to fade it, you got to think about where you're going to set manageable. Because as expensive as it seems right now at 142, we know when currencies get out of a range, they get naturally more elastic. What is fair value? What is the efficient price? Becomes a little bit more uncertain. And also, again, this $7 trillion a day market isn't just you and I and a zillion other dudes speculating on FX. The core of this is all these multinationals who actually use currency markets to hedge all their business. The more the market moves, the more every corporate treasurer has to look at hedging.
Yeah.
Hedging's a cost. They don't want to do it. If markets are flat, great. I don't hedge. I have no cost. I know with great certainty what in 90 days or a month or a year I'm going to be able to sell my goods at. When market starts to move, they're compelled to hedge. That tends to fuel these moves a little bit. So that's why we get that elasticity. So when I say set reasonable metrics, nothing's too rich, too cheap. What the tape is telling you is exactly where the market should be, but set mindful expectations. But this gives both flavors the opportunity to take advantage of the market move.
It'll be a fun day tomorrow for sure.
Absolutely. I think right now it was 9:30, if I'm not mistaken.
Yeah, I believe it is tomorrow. The schedule will be CPI at 8:30 Eastern, and then Bank of Canada at 8:45 Eastern.
Oh, really? So 7:45 Central.
Or wait, no. Oh, sorry, 9:45 Eastern. This is all Central.
Okay.
Gosh, I'm bad at this. I shouldn't be on like a
So the
news
right
channel.
decision is 8:45
Central Time, 9:45 Eastern.
Okay, very good.
Yeah.
Fantastic. Lots to look forward to, guys. And we'll be back with you tomorrow. Have a great day.